Hi guys, welcome back to the YouTube channel. Today we're talking all about property investment and is it still a feasible strategy where we are now in 2023. For those of you that don't know me, this is your first time here, I'm Joshua Tharby, Chartered Tax Advisor, Accountant, and I'm here to help you make more money, keep more money and build lifetime wealth. So property investment for the past 15-20 years, this has been a fantastic investment strategy. The returns that you could get were nothing less than phenomenal in a lot of areas, and it's helped a lot of people build quite significant wealth. Now, we know this firsthand. We're property specialist accountants, so actually this is great because we have hundreds of property investors on the books and we get to see behind the scenes what the numbers are saying. So we're in a very unique position to actually give great foresight on this because we're working directly with clients. We know exactly what the numbers are and the numbers never lie. And up until recently, before these crazy interest rates that we've had, at the minute, for those that are watching, the Bank of England interest rate is 5%. The next meeting is on the 3rd of August, and there are rumours or kind of forecasts, rather than rumours, not quite true, it's a forecast, that it will go up to 5.5%. So this would obviously be an additional kick in the teeth because it's going to have a greater impact on the mortgage affordability side of things. And that's really kind of what this whole property crisis that's being caused by the interest rates all stems from. So on the homeowners front, the mortgage affordability, when previously you were getting mortgages at 2 or 3%, well actually when you were looking at affordability, they were a lot more affordable. It was a lot easier to service the debt. Now for the homeowner market, well actually people's fixed terms are coming to an end, and as a result having to refinance, and for most mortgages, especially ones where you've had older interest or older fixed rates in place, mortgage payments are pretty much almost increasing by 50% or even 100% in a lot of cases, which means people just can't afford to stay in their homes, which means in the next kind of 12 months, that's when everyone kind of thinks this is really going to kick in, because we've only had these high interest rates for a couple of months now in terms of where we are, and they're increasing. So obviously when they increase more, it's going to have a greater impact, and it just needs a little bit of time for this to really kick into the property market. But several homeowners, we are starting to see it now, even when speaking to agents and clients, we actually are starting to see it where you have motivated vendors. You have homeowners who literally need to sell their property fast. They can't afford the mortgages and they'd rather sell it at a discount, lose what equity they have, than risk it being repossessed and going to the bank. And there are also many landlords who have issues as well with the interest rates, where previously you've had a good fixed rate, maybe 3 or 4% was very common. Now you're looking at 5 or 6%, potentially even 7 or 8 for many different lenders, depending on your circumstances. But actually, vanilla buy-to-let doesn't really work anymore. When we're looking at the kind of typical numbers of properties in the Peterborough area, say a £200,000 house, 75% mortgage on that, you would actually rent that out for about £950, £1,000 typically. We are starting to see rents increasing. That's definitely what we're seeing. Is interest rates, of course, have gone up massively, and this does have to be passed on to tenants realistically. But £200,000 house, £150,000 mortgage, 5.5%, the monthly mortgage on that is £687. And that's a cheap, I think there's a 2-year, I think it's mortgage work, so I've got those numbers from. But as you can see, if the rent on that is £900 or £950, there's not much in that. But actually, when I get stress tested, so different lenders do different rates, but basically 125% at the stress test rate, that's what the mortgage payment has to be. And in this case, that could be about £1,000 a month. So actually, you wouldn't even be able to get a 75% buy-to-let mortgage on that property because it won't pass the stress tests. And previously, before interest rates went crazy, that was a pretty good deal. You could get a property like that, you could make a decent return, and it was an easy buy-to-let opportunity for people that did just want passive income. But now you couldn't even get the mortgage. So it's for reasons like this that many are saying that property investment in 2023 just isn't worth it. What is my thoughts on this? Well, every day on Facebook, I'm seeing that landlords are selling up. People are getting out of the game, increasing regulation, interest rate, EPCs, and so on. There are so many reasons why all of these landlords are selling up because they don't think it's worth it anymore. And then that, for me, is always where I think, well, where people are leaving a market, there's opportunity. These people have been in there. Property is still going to continue going up in value in the long term. We're going to have a short period where it's going to fall maybe 10-15% across the board because of the high interest rates as we go into a bit of a recession within the next 12 to 24 months. But long term, property is not going anywhere. People still need houses. And fundamentally, for the past 10 to 15 years, the interest rates have been ridiculously low. So actually we've needed this to normalise interest rates, bring them back up to about 3 or 4%. So you pay about 5% on your mortgage, because historically that's what the average mortgage rates have been. So there's nothing crazy really going on here. It's actually just a bit of a reset. So if the vanilla buy-to-let doesn't work, actually now's the time to really start looking for opportunities. When we're talking to clients, many are getting their best deals ever right now. Of course, we've been in a bull market for the past couple of years, or even longer than that really, and as a result there's been a lot of money flying around, and property prices have been increasing across the board. There's a lot of activity, whereas now property go through a rough patch, which is great really for investors, because those that are willing to weather the storm are going to get the good opportunities and the significant, really, really profitable and wealth building opportunities. This is where they are now. When everyone else has turned their back on it, now's the time, because we are going to get the motivated vendors. There are going to be people that were thinking about getting into property or can't afford to do that refurb. There's so many different opportunities now as people actually just focus on what's in front of them, trying to repay their own mortgage, because we've got this different market environment. So absolutely, in my opinion, now is a great time to be in property. Whether that's serviced accommodation, that's a great time. We're speaking to clients all over, and they are making a lot of money in serviced accommodation, whether it's rent to rent or buy to serviced accommodation. Development as well, there's lots of opportunities. Because the market is so uncertain, now's the time to make money. You know what they say, the old famous saying by Warren Buffett, be greedy when others are fearful, and be fearful when others are greedy. And now, over the past 10 years or so, except for COVID, well, actually, the whole market was greedy, and probably then was time to be fearful to some extent. But now everybody's really, really fearful. Now's the time for property investors with cash or access to capital to come on and actually make serious life-changing amounts of money, because of the opportunities that are out there as everyone else leaves the market. So I think for everybody who's looking to get into property investment or even in it at the minute, now is a great time to be in property. You've just got to make the numbers work. You've got to identify the opportunities. Warehouses are £200,000 and it doesn't work, but actually focus on higher yielding areas. Where can you add the value? And ultimately, all that needs to happen is your offer and your purchase price needs to be adjusted so the deal makes sense. That is literally all that needs to happen here. Of course, when you're putting these offers in to agents, they're going to be a lot lower than their asking price potentially, but this is what's going to happen. You keep putting those offers in, prices are dropping across the board, and then eventually you are going to get a property at that price where it still makes sense for your deal criteria. So that's really all there is to it. Interest rates are high, yes, but what can we do about that? Buy properties cheaper. It really is that simple, guys. We're still buying properties, we're expanding quite hard. We are still saving a good proportion of our cash because things are going to get worse, but ultimately a deal now is still a deal now, but I just think there are going to be a lot more deals in the short term as well, the 12-month period. But as you know, you've got to be in it to win it. So you've got to be looking at properties every single day. You've got to be analysing this to ever see any deal, whether that's today, next week, or in a year's time. You've got to be in the game. So that's just my thoughts on it. What do you guys think? Is property investment still good in 2023? Let me know in the comments. I'd love to hear from you guys in the audience as to whether you'll be focusing on property investment or what your strategy is going to be in 2023 and beyond. Cheers for watching.